Hey everyone, in today's video, we're going to be talking about a stock that I have over $50,000 in. I'm going to talk about how many shares of this company I have. Then we're going to go into a bit of a business review about why I like this stock so much, some of the fundamentals of this stock. And then at the end, we're going to talk about how much in dividends this stock pays me every year and how much I think they'll be paying me in 10 and 20 years from now. If you like this type of content, be sure to give this video a big thumbs up. It really does help smaller channels like mine out with the YouTube algorithm. But without further ado, we're going to jump right into this one. So we're going to start with obviously the company here, which is TD Bank. TD Bank is a bank across North America. They started as a Canadian bank, but also have a pretty big operation in the US. In terms of my position in TD Bank, I hold it in three separate accounts. So I have 420 shares of TD in this first account, 140 shares of TD in this second account, and 95 shares of TD Bank in my Wealthsimple third account. So collectively, I own about 655 shares of TD Bank. It's one of my largest positions. I've owned it for many, many years. If I wanted to just start by going back and taking a long-term lens of this company has performed super well over time, along with all of the other Canadian banks. They operate in almost an oligopoly where they're essentially too big to fail for the Canadian economy, in my opinion. They continue to have really strong dividend growth over time, which we'll look at in a few minutes. But also their share price appreciation has been over the long term up and to the right. So I know we've had a bit of a dip over the last couple of years. There's been lots going on in the economy, interest rates, consumer pressure, macro pressures, that little banking crisis that occurred on the US side. But overall, I think the fundamentals are really strong on this company. They trade at a very good price to earnings multiple, and they have a solid business. So I'm excited to talk about this company here today. They have a $157 billion market cap and paying out about a 4.5% dividend yield as we sit here today, just before jumping into some more information on the company. In terms of TD Bank, it is a Canadian bank, but at the end of the day, this bank has gotten to be so big and expanding so fast in the US that it's actually one of the top banks in North America. So in terms of net income, it's the largest bank in Canada last quarter, fifth largest in North America. By a market cap standpoint, I think RBC is bigger than them. So they're second biggest in Canada, fifth biggest in North America. But this is a very, very big business, huge bank, big operation, tons of scale, lots of opportunities to leverage that for breaking into digital and other things. And I think the other thing here is that you're not just investing in a Canadian bank if you're a Canadian here. You are also getting some really good diversification into the US banking market with how much of the US that they are operating in. And that's a great pivot for this next slide here. There's lots of information here, but I think what you should focus on is just their branch location. So you can see they have 2,200 locations in North America. They have a ton on the northeast side of the US here. So they have really good exposure in these areas, and they continue to expand more and more in that area. Think, New York, New Jersey, Florida, the Carolinas, stuff like that. They have it all covered in droves and really strong market shares and momentum in those areas, along with all across Canada, as you can see as well. Going into their business a bit more, one of the reasons that I really like TD Bank versus lots of the other Canadian banks or just North American banks is their exposure is a lot less volatile. Lots of the US banks and RBC as well in Canada have huge capital markets divisions, and the earnings that these companies, or those segments rather, spin off are much more volatile. They'll be way up one quarter, way down another quarter. The commercial banking exposure of TD, 43% commercial banking in Canada, 31% of their earnings are retail banking in the US. That's 3/4 of the company's earnings right off the bat that are just from retail and commercial banking, which over the long term has proven to be much more recurring, much more stable quarter to quarter, year to year. So I really like having that foundational base of earnings and profitability in the company. And then some of the other things that TD own, they actually own a good chunk of Charles Schwab. That's from the merger with TD Ameritrade. So they get a payment every quarter from Charles Schwab for their portion of the profitability in that company. Their wealth management business is an area that they've been growing over the last number of years. So, wealth management and insurance is 15% of earnings, and in wholesale banking, maybe a bit more of a volatile space, but just a 4% stake of their overall earnings mix. So, this is one of the main reasons why I started getting interested in TD Bank as the bank in Canada that I like the most. It's that they have very stable earnings in terms of the segments they play in. They also have great brand equity in banking, and then they also are in only Canada and the U.S. So they're not making big investments in all these other types of markets and whatnot, like some of the other Canadian banks are doing. I'm invested in some of those as well, but I just really like the solidity of having Canada and the U.S. very strong economies, strong markets, really strong consumers as the playground for this bank. Going into the next slide here, they kind of break out just the four areas that they tend to play in the most. But what I really wanted to focus on is just looking at some of the growth rates on some of their key performance indicators here. Assets are growing at 8% CAGR over the last 5 years. Earnings are double-digit growth over the last 5 years. Return on equity is at about 15%, so not bad there. Total shareholder return, despite the dip in the market, still not too bad at about 8%. EPS growth, probably a more important long-term indicator, up double digits. And you just look at all of these numbers in terms of high single digits to double-digit growth on things that really matter to investors. And you'd be shocked to see that this company or this industry as a whole is trading for about 10 times earnings. You see here 2024, they're expected to do $8.60. A few weeks ago, TD was trading in the 70s. So it was about 9 times 2024 earnings, 10 times, under 10 times still 2023 current year earnings. So it's just interesting that I get that this is a more volatile sector of the economy, but despite their long-term growth trend of always increasing dividends, growing their share price and their total shareholder return over decades and decades, the fact that their oligopoly would be very tough to take a company like this down or for their equity to be wiped out in any meaningful way, and the fact that they've had asset growth, earnings growth, strong return on investments, EPS growth, that they still trade at bargain basement prices in terms of the PE multiple versus the market. So that's the reason that I have banking in my portfolio overall. I think that it's almost perpetually been undervalued, but I don't mind. I'll take the shares at those prices. As you saw on my earlier slide or showcase, that I'm actually up on every account that I hold TD Bank in, so have done well with it over time. That's not including the 4 to 5% dividend yield that they've been paying out. So the free cash flow, aside from the dividends and other investments, lots of them are going to share buybacks over time as well. So I'm disproportionately benefiting from the fact that the share price is lower. So as a long-term investor, I really don't mind the multiple that these stocks are trading at. I just think it's a great opportunity to, carve out a piece of the portfolio to these companies, given the dividends they pay, given the PEs that they trade at, and the longevity that they've been able to withstand in the market. Now, a couple interesting sound bites on TD specifically. TD had a planned acquisition of First Horizon about 18 months ago. It continued to get delayed and delayed. Lots of issues behind this one, most notably some regulatory hurdles in the U.S. Some U.S. regulators did not want this deal to go through. But between the $13 billion acquisition discussion, or agreement rather, and when this deal was looking like it was going to get done, there was a huge hit in the value of lots of the regional banks in the U.S. That's a video that's a story for an entire another video. But at the end of the day, TD Bank agreed to pay the breakage fee, probably $200-300 million, and just walk away, which I think while it was a missed opportunity not to break into the U.S. in a bigger way behind this acquisition, the reality was the current price or the current value of the asset that they were acquiring went down significantly from the $13 billion price. I can probably find it today. Actually, the current market value of First Horizon Bank is probably, I wouldn't be surprised if it was half that. And now I'm having a hard time finding it. I will follow up with what it is. I'm not sure if it's here or it's something else. But all I know is that it was trading significantly below that $13 billion acquisition price. And this may stifle their ability to break into the U.S. in a big way over a short amount of time. But I do think that they have other opportunities for this capital, and it'll be just interesting to see how they leverage that money that they put aside for this acquisition. Will they buy back more shares? Will they ramp up investments in Canada? Will they look for other acquisitions across Canada and the US? So, in addition to them trading at a 10 times PE, they also have billions and billions of dollars over their capital ratios that they have to be holding, that they were planning on buying out First Horizon with, and they really haven't allocated that capital anywhere strategically yet. And I just wanted to pivot the business review conversation to the dividend here. The dividend has been paid out for over 160 straight years. They've grown it over the last 30 years or so at about an 11% annualized basis. And it's just one of the more defensive dividends if you look at it over a long period of time that you'll find in the Canadian market. You're getting almost a 5% starting yield. And if you compound that out at 11% year over year over year, you're going to get a huge yield on cost 10 years out, 20 years out. I just did a couple examples of this dividend and where it's gone over the last 10 or 15 years. I think that slide may have even been a bit dated. But even if I just take 2003, the company was paying about 16 cents a quarter. And as of last quarter, they were paying out 96 cents in 2023. So in 20 years, the dividend's actually grown 600%. So I'm not sure where they got the 11% CAGR on, but if I just take 600 divided by 20 from that 16 cent a quarter dividend, the company's average dividend's up about 30% a year annualized off of that base from 2003. So anyone that was buying this company in 2003 or putting in like $1,000, getting a 2-3% yield, their yield on cost on that is now 600% higher. So about 18% annually just from holding the company 20 years. If you hold it another 10 years or another 20 years off of that, you can kind of just see the impact that that'll have. I did this little check here, which was today I own 655 shares from what I was showing. So I own just over $2,500 in annual dividends. That means every quarter I'm getting about $630 in dividends from TD. I actually just got my last round of TD dividends a couple weeks ago. But what I modeled out here is if I assume that I'm going to be reinvesting dividends at an average yield of 4%. Current yield is 4.5%. So I took some conservative measures here over the next 20 years. And if I assumed on average the dividend goes up 3% a year, which is significantly lower than what I've seen short-term, medium-term, and long-term on this company, that means if I don't invest any more money and I just reinvest the dividends that I'm getting, and the dividends keep growing at a 3% CAGR, that in 20 years, I'm going to be getting about $10,000 of dividend income. So that goes to show how I can turn $2,500 of passive income into $10,000 of passive income over 20 years without investing any more money, assuming these assumptions hold true. Now, if I was to model this out a bit differently, if I was to say the dividend would go up 5% a year, hypothetically, I may My Excel sheet's a bit broken, so it doesn't let me drag down. Yeah, so just bear with me here. But that number would go up in a big way as well. So it's interesting to see just how a couple points over a long period of time can have a huge impact on the end result here. So just going from 3% dividend growth annually to 5% dividend growth, now I'm at almost $15,000 a year in dividends. So huge impact, huge result just by that slight low single digit to mid single digit annual dividend growth assumption over 20 years. But in my opinion, I do think that TD will continue to increase their dividend at least mid single digits, probably higher over the medium term. They have tons of capital allocation opportunities, whether it's buybacks, whether it's more acquisitions, whether it's expanding the new types of banking. They have a lot of scale to push digital offerings that lots of regional banks and other competitors just don't have access to the same return on investment opportunities because their networks aren't as big. So I think these big banks, TD being one of them, is positioned phenomenally and will do really well. Looking at their stock again, currently trading at $86, 10 times next year's earnings. I'll take a company that as well positioned and as conservative as TD, trading at 10 times earnings with the track record that they have any day of the week, especially with that dividend growth that we were going over. I think that this will be a phenomenal long-term hold for me. So that's my breakdown of TD. That's why I own over $50,000 of this stock in my portfolio. If you like this type of content, be sure to subscribe to my channel and be sure to like this video for more if you are enjoying this video and if you want to help out with the channel. It's really the biggest thing you can do, just helping with the YouTube algorithm to get these videos in front of more people. Thank you guys so much for watching, and I'll see you in the next one.